Hi, y'all. I'm John Rotonti, a portfolio manager at Bastion Fiduciary and one of the hosts of Rebellious Allocations, which is our Bastion Fiduciary podcast. The date is March 17th, 2026. Today, I'm joined by Krzysztof Smalec for a business deep dive into Linde, ticker LIN. Linde is a stock that I own in the industrials and infrastructure portfolio that I manage at Bastion Fiduciary. Krzysztof is an equity analyst covering industrials and industrial gas companies at Morningstar, and there is some overlap between his coverage universe and the high-quality universe I focus on at Bastion. Krzysztof, welcome to the show.
Yeah, thanks for having me.
Great. Before we jump into the questions, I want to give some very high-level company statistics so listeners get a gauge for the size and the scale of Linde's business. Linde has a market cap of about $230 billion and net debt of about $23 billion. So its enterprise value is about $253 billion. In 2025, Linde generated revenue of about $34 billion and net income of about $6.9 billion, which is a net income margin of about 20%. It generated operating income of $8.9 billion, so its EBIT margin was 26%. Now, this is a capital-intensive business, so in 2025, Linde spent about $5.3 billion on capital expenditures, which equates to about 15.5% of sales. And in 2025, Linde generated cash flow from operations of about $10.4 billion. So it still generated a little over $5 billion in free cash flow, which equates to a free cash flow margin of about 15% and free cash flow conversion on GAAP net income of about 75%. Linde generates returns on invested capital of about 12%, according to Linde's management calculations. Okay, so ready for the questions here, Krzysztof. Can you please give us a brief history of Linde and any important milestones or inflections in the corporate history?
Yeah, sure. So the history of Linde is really as long as the history of the industrial gas industry itself, because it was a German scientist and engineer, Carl von Linde, who developed a method for liquefying air in the late 19th century. The Linde process, essentially a method of separating oxygen from liquid air, was patented, and then the first industrial air separation unit was built in 1902. Linde actually used to they used to have a presence in the United States in the early 20th century, but its US assets were confiscated during World War I. And these assets were then incorporated into the Union Carbide Corporation in 1917, and then eventually, decades later, spun off and renamed Praxair in the 1990s. So the history of the company essentially comes full circle with this mega merger of Praxair and Linde in 2018, which essentially reunited the two halves of the business that were separated a century earlier. And I'll just also say that the merger is important because it created the largest industrial gas firm in the world. And it occurred just 2 years after Air Liquide acquired Airgas in 2016. So this wave of consolidation reduced the number of large players in the industry from 5 to just 3: Linde, Air Liquide, and Air Products.
Perfect. Great history lesson right there. Thank you. What does Linde do? Can you please describe the business and discuss the business model, the three modes of distribution, the long-term contracts, and anything else that you think is important to mention in an overview of the business?
Yeah, sure. So Linde is an industrial gas firm that provides atmospheric gases. These include oxygen, nitrogen, argon, and rare gases, as well as process gases like hydrogen and helium. Like you mentioned, industrial gases are distributed through 3 different supply modes, all of which have different contract structures. So around a quarter of Linde's revenue come from on-site sales, usually to large customers like refineries, steel mills, semiconductor fabs. Basically, Linde builds a on-site plant either at the customer's site or connected through pipelines. And on-site customers typically signed long-term customer agreements. These contracts are typically 10 to 20 years and have take-or-pay clauses. So customers must pay a minimum fee even if they don't use the gas. Additionally, prices are indexed to the cost of inputs like natural gas or electricity. So industrial gas firms don't really take any commodity price risk in their on-site business. Then another 30% or so of Linde's revenue comes from merchant sales. This is essentially where the industrial gas firm delivers gas in liquefied form through tanker trucks and to a storage tank at the customer's site. Merchant customers also sign contracts, but not as long as on-site. So think typically 3 to 7 year exclusive contracts with an industrial gas company like Linde. Packaged gases account for another 35% of Linde's sales. These are usually purchased by smaller customers like local welding shops, sold in smaller quantities in individual metal cylinders. Lastly, the remaining 10% of sales come from Linde's engineering business, where the company will design and construct an industrial gas facility that could then either be owned and operated by Linde itself or just simply sold to the customer. The last thing I'll mention here, really briefly, is that in practice, operations are often tightly integrated across all three of these supply modes. So, for example, Linde can build a large on site plant, but then also use that plant to sell excess capacity through the other two supply channels, merchant and packaged.
Perfect. You mentioned some of the gases: nitrogen, helium, oxygen. You mentioned steel mills, semiconductor plants. Are there any other big uses for these industrial gases?
Yeah, definitely. So maybe we could just start with going through the atmospheric gases. These are produced through air separation using cryogenic distillation. Basically, a company will just cool air until it liquefies and then separates into individual gases based on their distinct boiling points. So, just to cover a couple of uses per gas, oxygen really has a wide range of uses, including steel making, welding, glass manufacturing. It can be used in the healthcare industry for respiratory therapy, like think, for example, during COVID, and as an oxidizer for rocket fuel. Nitrogen has several uses, a lot of which rely on its inert properties. In other words, nitrogen essentially doesn't easily react with other substances under normal conditions. And uses of nitrogen include creating a clean atmosphere for semiconductor manufacturing. It's also used in food packaging or cryogenics. Argon is used in welding, metal fabrication, steel manufacturing, lighting, and other applications. And then moving on to process gases, which is just a broad term for gases that are made through methods other than air separation. An important one is hydrogen, which is produced either using natural gas in a process called steam methane reforming, or more recently, electrolysis is another way to produce hydrogen. And hydrogen also has multiple different uses. It's used in petroleum refining, ammonia or fertilizer production, and in the chemical industry. Clean hydrogen, which I'm sure we'll cover later in our conversation, can be used, for example, in fuel cells and the mobility end market. So think, for example, applications like forklifts or heavy duty transportation. There are also some uses for power generation. Carbon dioxide can be used for carbonation of soft drinks or beer, fire suppression, refrigeration. There are really a number of other gases we could talk about, including rare gases, but the last one I'll mention just briefly is helium, just because it's topical right now, and it has a number of applications. From party balloons through semiconductor manufacturing and all the way to MRI machines. As we're recording this podcast in March 2026, so helium is a gas that your viewers might currently see being mentioned in the news because the war in Iran has created a significant disruption in the global supply chain, because nearly a third of the global helium supply depends on the Strait of Hormuz, and most notably coming from Qatar.
That was an excellent overview. I read recently, I think 10% of helium uses for balloons. So lots of uses there, but I didn't know 10% was for balloons. But when you go through the uses of these gases, it's just very clear how important industrial gases are to the global economy, industrial economy, but really the global economy. Everything from healthcare to chemical plants, steel plants, refining, semiconductors, electronics, on and on. So, excellent overview there. Thank you. Real quick, while we're just talking about sort of the business description, what percentage of sales are generated inside the US versus outside the US?
Yeah, so in 2025, Linde generated just a little over a third of its sales in the US. And overall, kind of like we discussed, these industrial gas firms are very diversified in terms of end markets. And Linde is also fairly well balanced geographically. Roughly 50% of its sales come from the Americas. In 2025, another 28% in EMEA and 22% in APAC.
Excellent. So business is diversified by both end market and geography. Real quick, if the dollar weakens, would Linde benefit from the weaker dollar? Would there be a currency tailwind in your opinion?
Yes, you're absolutely correct. Linde is a dollar functional company with, like we just said, roughly two-thirds of earnings denominated in foreign currencies. So a weaker dollar definitely can be a tailwind. For example, last year in 2025, foreign currency translation was a roughly 3% tailwind for Linde as the dollar weakened against most currencies and most importantly, the euro.
Thank you, Christoph. So moving on from the business description, can you please discuss the competitive landscape? Who are the main players and what is Linde's global market share roughly?
So the industry is essentially an oligopoly with the big three global players I mentioned at the beginning. And then there are also a handful of regional powerhouses. These include Taiyo Nippon Sanso in Japan. You have the Messer Group in Germany and Yingdi Gases in China. But these are just mostly regional players. The three global players really dominate this market. And we estimate the market share of these big three at around 31% for Linde, 28% for Air Liquide, and another 12% for Air Products.
So Linde, the largest global player in the world, as you said, after that merger with Praxair. How does Linde differentiate itself from the other two major players in that global oligopoly, Air Products and Air Liquide? What's different about Linde's business model, if anything? And then from an operational standpoint, does Linde stand out to you or differentiate itself in any way?
Yeah, great question, John. Fundamentally, the business models are really very similar among the three companies, though they all have certain areas of strength. After that large merger, Linde really emerged as a dominant player, both in terms of just the sheer size, but also profitability. Linde's operating margins are currently around 30%. Compared with around 25% for Air Products and 20% for Air Liquide. So Linde clearly above its peers in terms of profitability. Air Liquide is the most similar to Linde, both in terms of size, but also just kind of their overall exposure. They do have certain pockets of strength. For example, Air Liquide has a really strong position in Europe. The company is based in France. And it's also carved out a strong position in certain end markets, notably healthcare, but also electronics. Now, when you talk about Air Products, the company has pursued a very different strategy from its two larger peers, as its previous management team, led by CEO Seifi Ghasemi, really bet heavily on these massive blue and green hydrogen mega projects with mixed results, as Air Products has experienced pretty significant project delays and cost overruns, and now is sort of reevaluating its strategy under the new management team. In contrast, Linde is also investing in blue hydrogen projects, but it's taking a much more measured approach, investing in smaller, less risky projects and only committing capital to those if they can secure long term customer agreements for the offtake.
Excellent. Excellent. What are the drivers of demand and organic growth in the industry over the long term?
Yeah, excellent question. Historically, if you look at this industry, really the key driver of volumes has been industrial production, with just the caveat that the take or pay contracts in the on-site business limit the downside if industrial activity plummets. But in moving forward, we see potential upside from a few key areas, including clean hydrogen, as well as the electronics and space end markets. Before I maybe continue, for hydrogen discussion, I'll just start with a couple of quick definitions. So, hydrogen itself is a colorless gas, but your audience may have heard different color names used to describe the carbon intensity of different hydrogen production processes.
Blue and green, right?
You got it. The
Yeah.
vast majority of hydrogen produced today is gray, and that's made using typically natural gas, with the CO2 emissions just simply released into the atmosphere. Blue hydrogen, just like gray, is made using natural gas, but with the difference that the CO2 is captured and then it could be either used or stored. And then lastly, green hydrogen is produced using electrolysis. That just basically means breaking down water molecules into oxygen and hydrogen. And typically, that's done using renewable energy. So the advantage of green hydrogen is that it doesn't produce any emissions. A lot of the initial hype around clean hydrogen has obviously now died down due to changes in the regulatory framework under the new administration in the US, but we still see some opportunities. For example, Linde is working on a couple of large blue hydrogen projects in Texas and Alberta, and clean energy still accounts for roughly two-thirds of its $10 billion backlog at the end of 2025. Um, because of the changes, like I mentioned, in the policy framework, we still think there will be some opportunities in blue hydrogen for Linde in the US, but really it looks like for green hydrogen, it'll likely take much longer to play out before it becomes cost competitive at a large scale. The electronics end market is another area where we see growth opportunities, really fueled by demand for semiconductors and supplying industrial gases to semiconductor fabs. And we expect Linde to also win its fair share of projects in this area.
I want to, that was an excellent overview, by the way. Thank you. I want to get back to the regulatory risk in 1 second. But before I do that, very quickly, can you please discuss the opportunity with space launches? What is Linde selling to these rocket companies? And do you think this can be a meaningful new business line over time?
Yeah, thanks for asking this question, John. This is a fascinating topic. Linde provides really a wide range of molecules that are mission critical for space launches. Probably the most important ones being liquid oxygen, which is used as an oxidizer, and liquid hydrogen, which is used as a fuel. And we think Linde is really poised to capitalize on strong growth in the space end market. The company has been investing in infrastructure to support launches in Texas and Florida, and Linde currently supports about 70% of all space launches. So, if your viewers have seen footage of SpaceX or NASA rocket launches, it's more likely than not that Linde was the industrial gas supplier for those. Just really quickly, based on the FAA's forecast for the total number of space launches, we estimate that Linde's revenue from the space end market over the next decade could grow by around 3.5 times in our base case scenario, or as much as 5.5 times in our bull case scenario. Now, Linde does not disclose its space revenue, but management said on the Q4 2025 earnings call that it expects space to become a $1 billion business over the next few years. So ultimately, we do expect it to become a sizable end market.
So the One Big Beautiful Bill Act, OBA, phases out some renewable tax credits. And as you said, two-thirds of Linde's 10 billion in backlog is for renewable energy projects. So please discuss any risk you see to Linde's renewable or decarbonization business. And then overall, do you think Linde is positioned to benefit from the One Big Beautiful Bill Act? Like if you take all the pros and the cons, do you think overall Linde's positioned to benefit, or is the act more of a negative for Linde?
Yeah, great question, John. And there are really two different dynamics here with the One Big Beautiful Bill Act. On the one hand, the bill did accelerate the phase out of green hydrogen subsidies, as well as tax credits for solar and wind energy, which has significantly slowed the pace of deployment of new green hydrogen projects. But on the other hand, the bill preserved the 45Q tax credits for carbon capture, And these are really very important for blue hydrogen project economics. Just the key point I'd like to make here is that Linde does not currently have any major exposure to green hydrogen in the US anyway. So overall, we think the company is well positioned to benefit from the One Big Beautiful Bill Act on the other side, because it has preserved the incentives for blue hydrogen, which are much more important for Linde's strategy.
Yeah. And it sort of encourages reindustrialization of the US. And
Exactly. There are some incentives for semiconductor
yeah,
manufacturing. So overall, between all of those, I still see it as beneficial, even with the green hydrogen subsidies going away.
excellent. Thank you. So Linde has a long-term target to grow earnings per share by at least 10% over time. Can you discuss the components of that earnings algorithm? In other words, like how do you think Linde's management gets to that number?
So management really breaks down this EPS growth algorithm into three parts. There's capital allocation, management actions, and macroeconomic factors. Capital allocation includes growth capex in new projects, potential M&A, and share repurchases. Under management actions, think really price increases, productivity actions here. And each of these two parts of the stool have a roughly mid-single digit impact. So management believes that these two alone should help drive roughly 10% average annual EPS growth in the long term. And looking at the company's history, we think that Linde does have a track record that supports that goal. The wild card here really is macro, which includes base volumes and as well as foreign exchange translation. In the long run, we're optimistic that macro will support that at least 10% adjusted EPS growth target. But in the short run, macroeconomic headwinds could drag EPS growth down below that 10% target, at least in the short run.
Yeah, so let's get to that macro third leg of that stool, the macro wild card. So, can you please discuss the current environment and the current context in which Linde is operating? Because, as we just said, its long term goal is to grow EPS by 10% annualized over time. But for 2026, it guided for EPS growth of 6% to 9%. Part of this is possibly management starting the year with more conservative guidance. But why is growth slower in the current environment? What is weighing down growth currently?
Yeah, great question. I believe, like you said, that management's guidance for 2026 is prudently conservative given macroeconomic uncertainty. Overall, there are some positive factors here. Linde is facing easier year-over-year comps this year. The project backlog also looks very solid. Linde also has a strong track record on price and productivity actions, so I'm not really worried about that part of the algorithm. But the biggest question here is around volumes, especially given sluggish industrial activity data coming out of Europe and China. So the guidance, assumes a 1% currency tailwind and basically flat volumes in 2026. So if the macroeconomic environment were to improve, we could see potential upside to Linde's guidance. And lastly, I'll just mention that Linde has long followed a pattern of setting conservative guidance, then beating it and raising guidance again. For example, if in 2025 management raised guidance, I believe, three times during the year, um, and we could see this pattern continue in 2026 if macro improves, especially in the second half of the year.
Yeah, yeah. And as you said, that 6 to 9% initial guidance, it assumes no help from macro, assumes sort of flat volumes.
Yeah.
So you rate Linde as having a wide moat. What are the sources of its moat? And why do you think it's sustainable for the next 20 years?
Yes, like you said, we assign Lindy a wide mode rating based on switching costs and intangible assets. And when we look at switching costs, we think they really vary by supply mode. So we think the on-site segment has this highest switching costs, as these large on-site customers typically sign 15 to 20-year contracts, and switching to another supplier might require a substantial, if not really prohibitive, cost to either convert or purchase new equipment. Merchant customers also face switching costs, though not quite as high as the on-site business, as they still enter into contracts, but these are not as long. We're looking more in the 3 to 7 year range. They also rely on industrial gas companies for storage. And lastly, we don't really see any meaningful switching costs in the packaged business. Like I said earlier, in practice, these three supply modes are often tightly integrated, with the same plant providing industrial gases through all three supply modes. In addition to switching costs, we believe that Linde benefits from intangible assets. These include customer relationships, patents, engineering know how. Industrial gas companies often develop strong relationships with their customers as they offer a full spectrum of engineering and consulting services. And they have different ways to create value for customers through optimization programs that could improve efficiency, reliability, and safety. We believe that Lindy's wide mode rests mostly on the strength of its on site and merchant businesses, which benefits from long term contracts and high customer switching costs. Overall, we believe the company benefits from this really resilient business model as take or pay clauses and cost pass through mechanisms in the on site business allow the firm to withstand macroeconomic headwinds, including fluctuations in industrial activity or energy prices. So this overall gives us confidence that Linde can continue to out earn its cost of capital over the next 20 years.
Yeah, like you said, it has historically been a very resilient and defensive business. Lindy's management talks a lot about network density as a moat. What do they mean by network density?
Yeah, great point, John. So network density is a very important part of Lindy's strategy, and it also kind of distinguishes it a little bit, this focus on network density versus its peers. So network density essentially entails creating an integrated supply chain that encompasses all three of these supply modes that we've been discussing, and focus on establishing a really strong footprint in a specific geographic area. So basically, Linde can build a large on-site plant that primarily serves an anchor on-site customer, but the company can also use the same air separation unit to fill tanker trucks to then sell gases to merchant customers in the region. Now, because industrial gases are relatively inexpensive to produce, transportation costs often account for a pretty large fraction of the total cost of distributing industrial gases. So essentially, the smaller the radius of merchant customers around an air separation unit, the lower the average transportation costs, and so the better the economics. In addition to that, just really quickly, having multiple facilities nearby also improves reliability because if one of Lindy's plants is down for maintenance, the company can basically still supply its customers through other plants in the region or through its truck fleet. So, because of these factors, industrial gas distribution is really a regional business, and entrenched industrial gas firms can have, in practice, a near monopoly on a certain region, which creates significant barriers to entry for potential new entrants.
Yeah, like you said, they're selling that reliability. They have backup plants, they have the tanker trucks, they have the pipes. It's really hard for a competitor to just come in and try to take business in one of those regions because they may not have the pipes, they may not have the tanker trucks, they may not have the extra capacity. Discuss Lindy's pricing power for me. How often do they increase prices, and by roughly how much do they increase prices?
Yeah, another great question, John. And again, once again, my answer really varies by supply mode. So in the on-site business, prices are usually set either monthly or quarterly based on certain contractual formulas as Linde automatically passes through certain costs, like, for example, increases in natural gas or electricity prices. In the merchant and package businesses, industrial gas firms might review pricing in a normal year, maybe once or twice a year, but it could be also a lot more frequent depending on market conditions. For example, if energy prices materially spike like they did in the early 2020s, Linde can very quickly implement surcharges for that. And as far as how much Linde increases pricing, I would say on average, we'd expect pricing to outpace inflation by as much as 100 or even 200 basis points per year.
Excellent. So what is the main source of that pricing power? They are pricing above inflation pretty much every year. Is it the contractual pass-throughs? Is that the main source of the pricing power?
No, I wouldn't say as much as the contractual pass through. I would say overall their pricing power is very impressive. A key point really that I would like to make is that industrial gases play an essential role in customers' operations, whether it's a refinery, a hospital, or a semiconductor fab. But the cost of industrial gases represents a tiny fraction of a customer's total operating cost. So think really like the very low single digit percentage.
Mhm.
So this mission critical nature of the product coupled with its relatively low cost really gives industrial gas firms very strong leverage. Like we've discussed just a few minutes ago, Linde also benefits from this network density, which makes it a dominant player in certain regions. So even if Linde raises prices above inflation, from a customer's perspective, just simply accepting these price hikes is still a lot cheaper and easier than it would be for the customer to either switch to an alternative supplier, build its own air separation unit, for example, or move the factory to a different location. And additionally, this network density can allow Linde to offer superior reliability and efficiency. So even with the high pricing, they still deliver good value to their customers. So really, to summarize, Linde's pricing power is a function of multiple factors. There are the high customer switching costs. There's the oligopolistic nature of the industry, the mission critical nature, but at the same time, the relatively low cost of industrial gases, and just the industrial gas firms' value added, like increased reliability, safety, efficiency.
Yeah, one of my favorite business models, one of the ones I've had most success with as an investor, is that selling a mission critical product, but it only accounts for a very small percentage of your client's overall project cost or your client's overall budget.
Yeah, absolutely.
Would you just on one hand, we have Linde has these long term contracts for the on site business, 10 to 20-year take or pay contracts. On the other hand, it's also selling this mission critical product in this tight network, this tight, regional network. So would you describe any of Linde's revenue as recurring in nature? And if so, how much?
Yeah, definitely. Very, very insightful question, John. And once again, my the nature of recurring revenue really varies by supply mode. So the way we look at it is we see the on-site agreements, or about 25% of Linde's revenue, as falling squarely into the recurring revenue category,
Mhm.
given these long-term up to 20-year customer agreements with take-or-pay clauses, with energy cost pass-through mechanisms. A lot of the merchant business, or about 30% of Linde's revenue, behaves similarly, though it's not quite as secure as the on-site business. In the merchant supply mode, Linde also benefits from long-term customer agreements, but not quite as long as on-site, more 3 to 7 years. And Linde typically owns the storage tank at the customer's site. So there are still pretty high customer switching costs. And industrial gases, as we've been discussing, are mission critical. So essentially, as long as the customer continues operating its business, they will continue to purchase industrial gases from Linde. So that's still a pretty stable business. Another way to look at it is I would highlight that Linde generates roughly a third of its revenue from relatively resilient end markets. I'm thinking healthcare, food and beverage, electronics. So overall, that 25% of revenue that comes from on-site contracts is definitely recurring. And indeed, I would say it's probably about as secure as it gets, at
Mhm.
least within the industrial space. But you could probably argue that maybe around two-thirds, if not more, of Linde's revenue is highly resilient.
Yeah. So you rate Linde as having a wide moat. You also rate Linde's management as exemplary. What, in your opinion, makes them exemplary?
Yeah, in short, Lindy's investment history and execution are just simply phenomenal. The company has improved its returns on invested capital from the mid teens a decade ago and into the mid 20s. Not a simple feat in a very capital intensive industry. And the margin improvement since the Praxair Linde merger has also been stellar, with
Mhm.
adjusted operating margins since 2018 up by roughly 1,000 basis points in APAC and almost 1,800 basis points in EMEA. Again, I'll just repeat that: 1,000 basis points in
Yeah,
APAC, almost 1,800 basis points in EMEA over the last 8 years. Just simply outstanding.
it's incredible.
Yeah, and CEO Sanjeev Lamba has also, I think, built strong credibility. The company is very transparent. They tell you exactly what their EPS growth algorithm is and how they're going to execute, and then they just simply deliver. So you have this very resilient business model, incredible management team that has proven it can deliver strong results regardless of the macroeconomic environment. So these factors really make Lindy a sleep well at night stock.
Yeah, I definitely sleep well owning it on behalf for myself and my clients. I'll just quickly mention in my intro, I said that Lindy generates 12% returns on invested capital. For our listeners, they actually give two return on invested capital numbers in their press releases. Um, they give sort of the gap number, which is 12%. And then they give an adjusted after tax return on invested capital number, which is the one that Christoph just cited at 25%. So they use both like a gap number and then their adjusted operating income number for return on invested capital. I appreciate that transparency, how they give you
Hmm.
both numbers and sort of show you how they calculate it. So that's one more thing I like about the management,
Yeah, yeah,
um,
definitely.
is they give you both calculations. Can you please discuss Linde's capital allocation? How do they prioritize allocating free cash flow between paying down debt, making acquisitions, growing the dividend, and repurchasing stock?
Yes, Lindy is a very strong cash flow generator with operating cash flow averaging almost $10 billion over the last 3 years. The main use of cash, about 50% goes to capex. So think, investments primarily in new projects. To a lesser extent, we might see some small tuck-in type acquisitions here and there, but I would say mostly it's organic investments in new projects. Lindy is also a dividend aristocrat with over 30 consecutive years of dividend increases, and about a third of operating cash flow goes to dividend payments. And lastly, the company will use the remaining cash flow occasionally to deploy capital into share repurchases.
So let's get to your model and your base case assumptions. Over the next 5 years, in your base case, at what rate do you think Linde will grow revenue? Do you expect any margin expansion? And if so, how much? And then at what rate do you think EPS can compound over the next 5 years?
Yeah, in my base case, I'm forecasting mid single digit revenue growth, nearly 6% over the next 5 years, and around 300 basis points of total operating margin expansion,
Mhm.
or a little over 50 basis points per year.
Per
Um,
year.
that would take us from around 29.5% in 2025 to roughly 32.5% by 2030. While I'm not expecting the same rapid pace of margin expansion we saw in the years immediately following the merger, I still think there's room for further improvement. I just quickly note here that there are some parts of the business where Lindy's operating margins are already above 40%. And overall, I would expect this to translate into EPS compounding at a roughly 10% CAGR, or roughly in line with management's long term target.
So Lindy's a wide moat business, but it's also quite capital intensive. So what return on invested capital do you think Lindy can generate roughly over the next 5 years?
Yeah, so Lindy is a wide mode business, so we're confident about the durability over economic profits over the next couple decades. But like you said, the capital intensive nature somewhat limits ROICs. But considering that Lindy spends a low to mid teens percentage of its sales on capex, We see its ROIC profile as stellar. Since the Praxair Linde merger in 2018, adjusted ROICs have improved from the mid-teens into the mid 20% range. We see room for further improvement towards nearly 30% over the next 5 years.
Wow. Music to my ears. What are the biggest risks you think investors should be aware of with Linde?
Overall, Linde's resilient business model allows it to navigate macroeconomic headwinds relatively well, but there are some risks. I would say a sluggish global industrial activity could really constrain volume growth. Although Linde has strong pricing power, this could make it challenging to consistently hit that long term 10% EPS growth target without the help from volume growth. Additionally, a lot of the potential upside that we discussed in terms of revenue growth is concentrated in just a few end markets, including clean energy, electronics, and space. So, if some of these opportunities don't pan out, revenue growth could fall short of markets' expectations.
Krzysztof, is there anything we missed? Anything else you'd like to add to this dive into Linde?
Yeah, I just want to say thanks for having me on the show, John. Really enjoyed our conversation. I think we covered a lot of ground in our conversation, but I'll just end by noting that in our view, Linde is a unique hybrid stock. On the one hand, it has really strong defensive characteristics that help the firm navigate macroeconomic uncertainty. Mostly, I would highlight the contract structure in the on-site business, but also just the mission critical nature of its products. But then on the other hand, Linde has some really nice growth prospects, as we believe the company is poised to capitalize on opportunities in clean hydrogen, electronics, and space. So overall, we think this combination really makes Linde a stock for all seasons.
There you have it, folks. A defensive grower, hybrid stock for all seasons. Uh, Krzysztof Smalec, equity analyst at Morningstar. Thank you so much for coming on to the show and sharing your knowledge of Linde. This was a great discussion, and I hope to have you back on the show very soon.
Yeah, thanks for having me. Looking forward to our next conversation.
Bastion Fiduciary is a fee-only SEC-registered investment advisor. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions or personalized financial, tax, or legal advice. It does not constitute either explicitly or implicitly any provision of services or products by Bastion. All statements made regarding companies or securities are strictly beliefs and points of view held by Bastion or podcast guests, and are not endorsements or recommendations by Bastion to buy, sell, or hold any securities. Clients of Bastion or the host or guests of the podcast may maintain positions in the securities discussed in this podcast.